Financial markets continue to provide us with no shortage of surprises. Between political wrangling in Washington, shifting labor data, and surging digital assets, traders are finding, plenty of opportunities, but also plenty of risk. So before you place your next trade, watch this. Good morning, I'm Francois, your market analyst here at ATFX Africa, and welcome to today's market brief. As always, I will be walking you through key market movers, mixing some fundamentals with technicals, and, we'll add a touch of humor just to keep things lively and sharp. Let's kick things off with USD ZAR. Now, the dollar has been taking punches all week, and yesterday's ADP jobs report delivered another stunning uppercut. Instead of adding 50,000 jobs, the US economy lost 32,000 jobs, an unexpected contraction that left us as traders almost begging the Fed for more rate cuts, which is now sitting at a whopping 99% probability for a rate cut later in October or later this month, as per the CME Fed Watch. Add into this a government shutdown, and suddenly the dollar's image as the safe haven euro looks more like a soap opera villain. Meanwhile, Africa's rand is flexing, hitting its strongest level since September 2024 at 17 rand and 20 cents to the dollar. Why, you might ask? Well, gold is rallying, US dollar is weak, and the South African Reserve Bank is holding its repo rate at 7%. Investors are finding those South African yields much more attractive in this specific environment. USD currently hovers near 17 Rand 20 cents if we look at the charts, with a 1 month strengthening trend for the Rand. The pair remains well off the April highs near 19 Rand and 93 cents, which are leading traders to now watch that 17 Rand and 5 cents handle as short-term support, while resistance sits closer to 17 Rand 40. A break below the support could extend Rand gains, while any dollar recovery on Fed direction may push it back higher once again. Moving over to cryptocurrencies, Bitcoin is trading just above $118,500, notching nearly a 6% gain in the past month and up a staggering 95% over the last year. The latest catalyst? Well, Meta Planet's massive $620 million purchase, making it the fourth largest corporate Bitcoin holder. It's a, corporate FOMO move that could rival MicroStrategy's playbook. On top of that, analysts are calling, last week's dip below $110,000 the bottom, and here's why. On-chain signals, short-term holders already capitulated, stablecoin ratios suggest buying power is back, and whale wallets are fattening up once again. Even US investors showed resilience, with Coinbase premiums staying positive. October also has a historical reputation to be Bitcoin's lucky month. But as always, volatility remains Bitcoin's middle name. Looking at the chart, Bitcoin's local bottom near $108,000 has become a very key support zone. Resistance now sits closer to $120,000, with momentum favoring the bulls. A sustained push above could open the doors towards $124,000, while a dip risks revisiting that $112,000 range. Finishing things off with Wall Street, which seems, relatively unfazed by the government shutdown. That's at least for now. The Dow closed near record highs around 46,500, shrugging off that weaker labor data and PMI data. Rate cut optimism is keeping sentiment afloat, and as stated earlier, the market is now pricing in a 99% chance of another rate cut on the 29th of October. Healthcare and tech stocks are doing the heavy lifting at this point, while Netflix slipped after Elon Musk told people that they should, well, just cancel their subscriptions because apparently he's got time to do that as well. But here's the twist. With non-farm payroll reports delayed due to the shutdown, yes, traders, you heard that right. Non-farm payroll is not taking place tomorrow. It has been moved to the 10th of October, which is next week, Friday. Traders are now forced to lean heavily on private data like ADP. While this hasn't exactly built a reputation for accuracy lately, that uncertainty means volatility could creep in when markets least expect it. The Dow continues to hover around a 46,500 zone if we look at the charts, with immediate support lying near that 46,300 level, while resistance holds closer to 46,700. The index looks relatively steady for now, but shutdown politics in play, that, well, steady could turn into stormy very quickly. So the big question here today is, will the Fed's next move keep fueling risk assets, or will the shutdown story finally break Wall Street's composure? Tomorrow, we'll dig deeper into how the absence of non-farm payroll data could reshape short-term trading setups. So stay tuned. This drama is far from over. And that brings us to the end of today's Daily Market Brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Head over to ATFX Africa by clicking the link in the description and go and experience the difference for yourself. Until next time, stay sharp, stay focused, and, well, trade smart.